Hello, everyone, and welcome to this on-demand webinar brought to you by Innovation Tax in association with the Hertfordshire Growth Hub. Over the next 25 minutes, I will be covering a range of innovation-focused tax incentives and how they've been affected in the autumn 2024 budget. The presentation will focus on R&D tax relief, capital allowances, patent box, energy tax incentives, and grant funding for innovation. These incentives are crucial for UK businesses as the government prioritises innovation, sustainability, and economic growth. In terms of the budget headlines, there are really two. First of all, record R&D investment, in that the government has pledged 20.4 billion for R&D over 2025 to 2026, reinforcing its commitment to fostering innovation. There's also corporate tax stability, with the headline corporation tax rate capped at 25% for the rest of this Parliament, providing certainty to businesses. Additionally, key investment reliefs, including capital allowances, R&D tax credits, and the patent box, remain intact, signalling the government's ongoing support for innovation and business growth. Looking at R&D tax incentives and compliance updates. Well, the government is maintaining its support for SMEs, in that the current rates for the merged R&D expenditure credit and enhanced support for R&D intensive SMEs will continue. There will also be enhanced HMRC support and compliance. HMRC establishing an advisory panel to improve guidance and resources for businesses. There will also be a new R&D disclosure facility launching by year end. This facility will address compliance issues, targeting agents who fail to meet HMRC's standards. The government is also exploring options to expand the use of advanced clearances for R&D reliefs. Consultation is planned for spring 2025. In terms of public investment in R&D, public R&D funding has increased to a record 20.4 billion, with a 4.5% uplift in the Department for Science, Innovation and Technology's R&D budget, now reaching 13.9 billion. In terms of government's approach to R&D tax reliefs, let's look at 2023 to 2024 first. Significant focus has been given to error and fraud in R&D tax relief claims and addressing those high levels. The government having released new data highlighting both the challenges and improvements in compliance. In terms of the scale of the issue, over 2022-23, we saw R&D tax relief claims rising from 3 billion in 2014 to 2015 to 7.5 billion 2022-23. However, this was also matched with a decrease in claims from 83,000 in 21-22 to 65,690 22-23, with SME claims in particular dropping by 23% to just over 55,000 from the previous level of nearly 72,000. Error and fraud levels in 2021-22 were a whopping 1.3 billion, which accounted for 17.6% of all R&D claims. The highest error rate being in the SME scheme at 25.8%, compared to just under 5% for the RDET scheme. And in terms of non-compliance, around half of SME claims showed partial or full non-compliance, 30% being fully non-compliant. Against that backdrop, significant improvements have been made 2023-24. in that error and fraud reduction dropped to 7.8% overall. The SME error rate decreased to 14.6%, and HMRC improved processing efficiency, processing 92% of claims within 40 days. That's up from 75% in previous years. In terms of the government's compliance approach, they increased staff levels from 100 to over 500 since the 2021 period. Compliance checks now cover 17% of claims in 23-24. That has enabled £441 million being reclaimed from incorrect claims within that period. Although, having said that, 89% of compliance checks were settled amicably. Looking at sector analysis within compliance, the lowest non-compliance was found in manufacturing and professional services. High-risk sectors being accommodation, catering, and wholesale and retail. Whilst first-time claimants do show high non-compliance, with 64% of claims being non-compliant. We've included a link to the detailed report should any of you want to read up further. I'd now like to move on to grant funding. There are a number of key funding commitments within the autumn 24 budget. Government R&D investment, 20.4 billion allocated in 25-26. This includes at least 6.1 billion for core research. This investment fully funds Horizon Europe participation, which will enable UK researchers and businesses to engage in the world's largest research collaboration, valued at over 80 billion. In terms of health and life sciences, there is an NIHR budget boost with over 2 billion in funding to accelerate life sciences, innovation, and advance health and growth initiatives. For life sciences manufacturing, there is the launch of the Life Sciences Innovative Manufacturing Fund with an initial 70 million in grants. This is part of a larger 520 million commitment to strengthen UK life sciences and manufacturing. Sector-specific R&D investments. First of all, aerospace. 975 million over the next 5 years to support R&D in aerospace. Further details will be released in the spending review phase 2. In the automotive sector, over 2 billion is committed to R&D and capital funding for the automotive sector. This includes zero-emission vehicle manufacturing and supply chains. Again, more details will follow in the phase 2 spending review. Finally, energy and sustainability. 125 million in investment to support energy in innovation with Great British Energy. And in terms of carbon capture and storage, nearly 4 billion has been allocated to this within 2025-2026. Looking at capital allowances, the government is committed to supporting business investment through capital allowances and promoting a sustainable energy transmission. To achieve this, key measures do include full expensing, in that permanent full expensing for qualifying assets, along with the 1 million annual investment allowance writing down allowances and the structures and building allowance. Government are also looking at plans to consolidate and simplify the Capital Allowances Act 2001 to help businesses understand what qualifies for various allowances. There will also be a consultation to clarify the tax treatment of pre-development costs. This aims for more transparency and simplification. Looking at green investment incentives. First of all, there is an energy transition support. This aids in the energy transition whilst preserving jobs, in that the first year capital allowances, 100% within the energy profits levy, will remain. The decarbonisation allowance, which is 66% in cash value, is also retained to encourage investment in cleaner, low-emission technologies. In terms of green first-year allowances, there is an extension of the 100% first-year allowance for zero-emission vehicles, applicable for qualifying expenditure on zero-emission cars, and for electric vehicle charge points, in that qualifying plant and machinery expenditures will also receive the 100% first-year allowance, extended until the 31st of March 2026 for corporation tax and the 5th of April 2026 for income tax. In terms of future plans for capital allowances, the government plans to explore extending full expensing to assets bought for leasing or hiring when fiscal conditions allow this. Also, HMRC will continue to work with stakeholders to provide clearer guidance on what qualifies for capital allowances, hopefully, therefore, reducing any uncertainties for businesses. Moving to the patent box and other intellectual property incentives. The patent box scheme reduces the effective tax rate down to 10% for all profits derived from patents and other qualifying intellectual property, incentivizing innovation-driven firms to retain and commercialize their IP within the UK. The scheme aims to make the UK a more attractive hub for IP development, commercialization, and retention. So what are the key benefits for business within the patent box scheme? Firstly, increased cash flow. The lower tax rate on IP profits can boost cash flow, allowing businesses to reinvest in further R&D and innovation. Patent box also gives businesses a competitive edge. By reducing the tax burden, the scheme helps UK companies remain competitive on a global scale, especially for industries where IP is a primary asset, such as pharmaceuticals, technology, and engineering. The patent box also supports long-term investment in IP, in that it provides certainty for businesses that rely on patented technologies for their revenue generation. The government have also reaffirmed its commitment and support for the patent box scheme and the intangible fixed assets regime, ensuring continued incentives for IP-focused businesses. This stability in tax policy signals the UK's commitment to fostering a strong innovation ecosystem and encourages firms to conduct more R&D domestically within the UK. Let's look now at any other tax reliefs and incentives. Firstly, those supporting the UK's creative industries. The good news, the UK government will continue to provide substantial support to its world-renowned creative industries, with enhanced tax reliefs expected to deliver £15 billion in support over the next 5 years. Land remediation relief. Government will be launching a consultation in spring 2025 to evaluate the effectiveness and value of this relief, ensuring it meets its objectives. Audiovisual and video games tax credits. From the 1st of April 2025, film and high-end TV productions can claim a 39% rate on UK visual effects costs. Visual effects costs will also be exempt from the 80% cap on qualifying expenditures. In terms of independent film tax credit, UK firms with budgets under 15 million and led by a UK writer or director will qualify for an enhanced 53% rate on eligible expenditure. This applies to costs incurred after the 1st of April 2024 for films beginning principal photography on or after this date. Cultural production reliefs. Theatre, orchestra, museums, galleries. From the 1st of April 2025, relief rates will be set at 40% for non-touring productions and 45% for touring and all orchestral productions. These rates are applicable UK-wide and support the sustainability of the performing arts and the cultural exhibitions sector. So to conclude this update on the autumn 24 budget, first of all, we believe that there is a commitment to growth within innovation-focused tax incentives, in that the autumn budget 24 demonstrates the UK government's commitment to fostering economic growth through targeted investments in R&D, sustainable energy, and the creative industries. Government is also looking to support innovation and resilience. By maintaining key tax incentives and compliance initiatives, the government aims to strengthen the UK's position as a global leader in innovation, technology, and creative output. And looking forward, the budget does, we believe, set a stable framework for businesses to invest confidently, adapt to future challenges, and seize new opportunities in what is an evolving global market. Thank you very much for your time today. And if you have any further questions or you would like additional resources, please don't hesitate to reach out, either to your contact at the Growth Hub, or you can contact Innovation Tax directly. Phone numbers are on the end of the slide here, or email sashin@innovationtax.co.uk, visit our website, or our offices in Welwyn Garden City and Leicester. Thank you very much for listening. I hope it was informative. Goodbye.